Good morning and welcome everyone to the Moneycontrol live stream. You're watching The Opening Bell. I'm your host Nickey Mirchandani. Well, markets look set for a volatile day on FNO expiry week. This is an FNO expiry day instead, the monthly FNO expiry day. SGX Nifty futures indicate a positive start for the markets. Asian shares are mixed at this point of time. While if you talk about the Wall Street, that has also extended its losing streak for fourth consecutive session yesterday. If you talk about FIIs, DIIs, contrasting picture out there. FIIs have sold in shares worth around 579 crore, while DIIs have bought shares worth 371 crore. All right, then let us get going and discuss some stocks and strategies with the guest who's going to be joining us shortly from MOSL. But before that, let's actually address how this monthly expiry would look like, whether or not it would be able to reverse the trend that the market has been witnessing thus far. But actually, let's bring in our guest right now, Chandan Taparia, who is the head technicals and derivatives at Motilal Oswal. Chandan, good morning. What do you make out of the markets, and do you think Nifty would be able to reverse the 4-day losing streak that it has witnessed? And do you think this expiry could change the stance right now?
Good morning. Thanks for having me. So if I look at the market internal, the Nifty has been forming lower highs, lower lows from last 4 trading session. In this recent decline, the Bank Nifty has underperformed more. The Bank Nifty has corrected by around 2,000 points from all the way to 42,000 to now near to 40,000 marks. We have seen the Nifty is down by 2%, and this is the third consecutive series where we are negative. If I look at the past data, we hardly go negative for third or fourth consecutive negative series. So if I look at the data point of view, I believe some more pain could be there. If you look at positional point of view, then markets would get stability. But if I only go with the price pattern and the derivatives internal, the negative trend could remain intact as of now because resistance are gradually shifting lower. Immediate level was 17,777. Index has decisively broken and corrected by more than 250 points from the same. So I believe that in the entire series we have seen pressure. Many FNO counter are trading much lower than volume weighted average. So some more weakness could be there. So sell on bounce could be the strategy. And we believe that till Nifty holds below 17,777, some bounce can be utilized for initiating the short side position, and market has potential to revisit the budget low of 17,350 zone positionally.
You said sell on bounce as the strategy in the next FNO expiry, next FNO series for that matter, right?
Exactly, because see, after the decline of around 500 points, some recovery could be there, but concern is that whether the recovery is being respected or not. And we have seen sustained selling pressure where every small bounce is being sold. So that's why I believe that till 17,777 is not surpassed, better to be light or initiate with some negative side position in the market. And one more thing, that in last 2-3 days, we have seen jump in the India VIX by around 20%. Even on the last day, the VIX has spiked by around 11 to 12% and now near to 15.5. So spurt in the VIX with FI short positions and decline in the put call ratio also indicating some concern or some restricted or kept upside in the market at higher level.
All right, higher volatility and lower PCR, Chandan, is that also the trend which is playing out today? And if that's the case, what do you make out of it? And also, Bank Nifty index, it closed below that 40,000 level. Do you think there could be a bounce back today in today's session?
So, Nickey, we have seen a decline of around 2,000 points from higher levels in Bank Nifty. And Bank Nifty is one of the index which is comparatively underperforming. So some bounce could be there, but not expecting the bounce to hold beyond 40,250 or 40,500. That cluster of 40,250, 40,500 could again provide some supply, and major support will go to 39,400. So as of now, as immediate trend and structure is negative, so we will utilize to buying put on any bounce back move. And I believe that most of the banking counter are in pressure, including your Axis Bank, Indusind Bank, Kotak Bank, and it is very tough on the last day to get major recovery because the entire series were under pressure comparatively.
All right, any 3 calls that you think could be a profitable bet for the viewers out there?
So if you look at the trading side, on the buy side in the market, even after the market decline, then I have selected 1 or 2 names. Then for sell side, we have multiple choices here. So for long side, we can recommend long on the ITC. This stock is up by around 13% in this series. Trading well, resilience at the time of market decline, which clearly indicates the nature of generating alpha of the stock recently. Poland flag price pattern breakout is clearly visible, which has bullish implication. So ITC could be the one name with support of 373 has potential to rally towards 405 level. Now, if you look at the negative side, we have negative or sell recommendation on the Godrej property. Stock can correct by 3 to 4% from current level. Even Zee Entertainment, which has seen the negative structure trading near to the 16-month low level, has potential to go down towards 190, 195 level. So ITC on the long side, Godrej property, Zee, ABFRL, Canara Bank, there are multiple names which are in pressure in the market.
Sure, Chandan. Just be on the sidelines and let's actually address stocks and news, because we also have Zee Entertainment, which Chandan suggested as the top news maker for the day. So I'm just going to get in his assessment later at the opening. But right now, let's look at what we have in terms of stocks and news. Zee Entertainment, while NCLT has allowed Indusind Bank's insolvency plea against Zee Entertainment. Now, this comes even as Zee is close to completing a merger deal with Sony. UBS came out with a report this morning and said that this could be potentially will lead to an overhang coming in on the merger deal with Sony. Now, do remember the fact that this was the major re-rating trigger according to major brokerages, and an overhang or a delay for this kind of merger can be a little negative coming in on the counter. Orient Cement, well, the company has terminated the MOU that it had signed with Adani Power Maharashtra. Now, the MOU was due to the failure in obtaining the required clarification or the required permissions by Adani Group, which led to the termination of the MOU. Of course, that's also going to be one of the negative coming in for Orient Cement per se, but this will actually be a good news coming in for the bunch of cement names which were expecting rather aggressive expansion coming in from Adani's right now. So that seems to have receded. The fear seems to be receded a little bit. Tata Steel is another one on our radar today. The company has decided to raise in the stake in subsidiary NINL to 5% as compared to nearly 1% that it had earlier. Of course, it's seen as a positive development because the shareholding in its subsidiary would lead to higher amount of funds which are, funds which are there for NINL. Now, NINL can use these funds towards the working capital and the capex requirement that they have. So, net coming in positive for both Tata Steel as well as NIL. Also, in another news makers that we have for the day, we have CLSA report on GAIL, where there is a buy rating coming in on that one, and the target price also has been raised to 125 per share. Where it is factored in a 40% tariff hike coming in on this one. There is upgraded, they've upgraded also the EPS estimate for FY24 and 25 by almost 14% and it says that the GAIL proposed an integrated tariff encompassing most of the key gas transmission pipelines. So that's going to be a positive, because that would imply a 70% hike coming in from FY22 blended tariff. So clearly some amount of traction building in on this one, and the development seems to be also suggesting a positive momentum building in for GAIL, given the tariff hikes that have been proposed, 70% uptake as compared to the previous number. Again, we're looking at a steel note, a metal note coming in from City brokerage, which is suggests now do remember the fact that metal counters overall have staged a smart recovery coming in on account of the bullish view by most of the brokerages around, and City this time is no different. All right, we are also adding in, the City has actually added in SAIL with Tata Steel as top picks. Now this one remains to be an interesting one. Overall, it has a bullish recommendation for all of them, barring JSW Steel. So that remains to be important. But Chandan, I'm just going to quickly toss it back to you and ask you, what do you make out of the metal space, especially what do you think about Tata Steel, JSW Steel, and even SAIL for that matter?
So first, if I look at the Nifty Metal Index, somehow some sort of inverted pole and flag breakdown is clearly visible. So negative setup is there if I look at the Nifty Metal. But if I look at the individual stocks, then Tata Steel somehow taken support near to 108. It witnessed recovery, but on last day it corrected by around 1.5%. But I still believe that 108 could provide support. So with support of 108, one can play the bounce towards 115 in Tata Steel.
All
If you look
right,
at the
Chandan, I will just quickly address the market opening and then come back to you again. Nifty 50, well, it's a positive start coming in for the market. You're looking at flattish amount of gains coming in for that one. Pretty much slender trade. You can't really make much out of it. Also, do remember it's the monthly FNO expiry, so a lot of volatility is expected to play in. Nifty Bank Index, well, a flattish start coming in on this one. At least in the first 2 hours, really, you will have more of this emotional trading happening rather than more of directional trading, which could take over in the wee hours of the trade. But Sensex is also 0.1% out there, and if you look at the mid cap index, that doesn't seem to be participating in the somewhat flattish to positive bias here. Small cap index, somewhat a positive start, but not exactly a very exciting scenario that we're looking at. And if you can also look at the Nifty top gainers and top losers, the top 3 charts that we have for us, so that would actually give us an indication of how the markets have been moving in for us. So if you could pull up Nifty 50 top gainers, top losers, these are going to be some of the counters that we'd like to keep an eye out on. And apart from that, we are also looking at Nifty Metal Index. Now do remember, Nifty Metal Index has also gained some amount of gains coming in. There is 0.1% out there, and there on the screen is the Nifty top gainers. HCL Tech, ONGC and Coal India. These are the 3 stocks which are on the gaining side. And on the losing side, of course, UPL, JSW Steel, TCS, all of them seem to be stating some amount of traction in early trade today. BPCL, Tech Mahindra, Bajaj Auto are some of the other gainers that we have on our list. On the losing side, we have Adani Enterprises and Adani Ports. Well, the story is no different. We've been seeing that trend playing out for a couple of days, and this time around also, we're seeing Adani group of stocks languishing just at the bottom. But Chandan, quickly come in on this one. What do you make out of Adani stocks right now? Do you think there is something that we can look beyond and above what's going on with Adani Group per se?
Sorry, I can't comment much about the name because these stocks were in a huge volatility. The trend isn't down, but as of now, I'll wait for any kind of stability and volatility to get smoother. Then only I can comment. As of now, it's not in my watch list. I'll avoid the name.
All right, not in your watch list, but what is looking exciting right now? It's rather a lackluster market. What do you make out of the trend? Any direction now that you can give in, at least for Bank Nifty? What do you think about it?
So like if I look at the Bank Nifty index, yeah, trend is negative. The small bounce was being sold. I believe with hurdle at 40,250, Bank Nifty has potential to revisit 39,750 to 39,400.
All right, how about Reliance Industries? Could you suggest a level on that one?
Yeah, so looking at the Reliance, I think let it correct and then 2300 could act as a major support. So with support of 2300, one can play the bounce to 2420 level.
This stock makers, we also have Sonata Software, where there is a deal coming in. There's a small deal which was apparently being signed by the company with, for an acquisition of a small stock, but Delhivery is also in focus. Mahindra CIE, if you could pull up the charts for that one, because relatively we saw Sonata Software, as you can see in the opening deals, we've seen cuts coming in on that one. The deal probably is not taken too well by the markets, 5% down and out on this one. And if you also talk about Mahindra CIE, which has reported good set of numbers, there has been more than 100% jump in PAT where we're looking at. So, that one is positive for you. But also, I'd request my team to actually also pull in Zee Entertainment stock price for you, because that was one counter that we were clearly keeping an eye out on. And like we indicated right at the opening of the trade, that this is a negative coming in for the counter, and here it is. Almost 5.5% gone on this one. So clearly, the re-rating catalyst that was seen by Zee Entertainment, that the merger deal with Sony, that is now delayed by a little bit. So clearly not so positive news coming in on this one, and you're seeing that overhang now reflecting on the stock prices with cuts of more than 6% But Chandan, I'm just going to quickly toss it back to you and ask you one final question that I have for you. In this case, what do you make out of the new age stock? Because there were also some reports coming in for Delhivery, which has seen a good 15-20% kind of traction from the start of Feb. Do you still feel there is upside to the existing level of this counter?
So if you talk about the new age companies, these stocks were under pressure recently. But if I talk about Delhivery, somewhat stability is clearly visible from last 4 or 5 weeks. So I believe that with support of around 325, you can see an uptick towards 360 level.
Right, Chandan, we'll leave it at that. Thank you so much for taking out the time and speaking to us as always.
Thank you.
All right, it's that time of the show where we get in our fundamental guest, Pankaj Pandey from ICICI Securities will be joining in. Pankaj, good morning. I'm going to start off by asking you about the banks. Do you think banks have now topped out? There is this whole narrative coming around of NIMs and profits having peaked as the deposit gets repriced in short term. What do you make out of it? Or do you think that's a temporary theory?
So one is, see, on the NIM side, we still expect in Q4, we might see 5 to 7 bips kind of improvement in the overall NIMs. But I think we have seen good amount of beating taken by most of the banks. I mean, something that HDFC Bank is now down about 10 odd percent. And when you sort of look at other tier one banks, they are down in low double digits. Something like Federal Bank is down from 143 to say about 120 or 123 kind of levels. So I think all of that is sort of there in the prices. So our sense is that, see, globally things are still sort of volatile. I mean, the US overall, there's no clarity in terms of the quantum of hikes and how long this inflation and stable or good job data is going to sort of sustain. So in that context, IT stocks have already sort of done well. So I would want to believe that probably it's time to sort of book some profits in the IT as overall pack. And banking overall has been sort of looking good to us. One, because overall expectation is that we will see 13 to 15% kind of a credit growth. Then I think the other thing is that most of the banks are now focusing on high yielding book, especially when you sort of look at most of the tier one names. So for example, Kotak Bank, 2 years back, their unsecured retail loan was somewhere about 6%. Now it is 9%. For HDFC Bank, it's about 16 odd percent. It had come down below that. Something similar is for even for Axis Bank, or even for a bank like SBI. So our sense is that that is probably going to help them deliver stable NIMs and not really sort of see a sharper decline in NIMs. So obviously, NIMs have expanded and cannot continue to remain at these elevated levels for a longer period of time. But I think the bigger concern always has been the asset quality side. So we really do not see much of the challenges panning out for the next 1 or 2 years. So from that perspective, banking, I think in this correction looks good to us. I think HDFC Bank and Federal Bank, I think besides Axis Bank, so all of them are sort of looking attractive to us. I think from a risk reward perspective, I have started liking banks now.
All right, that's quite a contra call coming in from you, Pankaj, because most of the experts whom I spoke to suggested that the rally probably was overdone. And, you know, we've also seen financials playing up as a big theme in the previous year. So there was this whole fear that probably valuations are now looking a little stretched for that matter. So clearly you are looking at some amount of traction. Maybe you're bullish on this counter for the another 2 years, and you seem to be bearish on the IT counter, right? Where there was this whole narrative building in whether a mid-cap IT space is better, or for that matter, a large-cap IT space is better. But clearly you suggest at this point of time, this is more sentimental rally which has been seen and nothing which is fundamental in nature. Have I got that right?
Correct. So even if you look at, we've seen a good rally in NASDAQ and even in our IT stocks. While I'm not saying that the numbers were bad for IT as an overall pack, because we have seen overall 0.5 to 2.5% kind of a quarter-on-quarter revenue growth for most of the tier one names. There's been a margin expansion. The TCVs have been particularly good. But the challenge is that the overall environment in US is still sort of not really cozy for overall spending to sort of be at elevated levels. Then obviously there are concerns in terms of the vendor consolidation. So obviously tier two names, unless the management is very confident, there's something like Cofort, which is clearly guiding for 22% kind of a CAGR kind of a growth and high teen kind of a growth in FY24. I think most of the other companies have seen a decent bounce, and I think since market or Nifty is largely is expected to be sort of bounced in a range, so I would want to believe that whatever had sort of panned out earlier, so especially the domestic oriented sector, especially banking, should do better compared to global sectors like say IT, where things are still sort of hazy, especially in US.
Well, that's a fair point there. Since we have spoken about IT, let's also talk about FMCG, which is again going to be a defensive space that we're talking about. In this quarter, the commentary suggested that the outlook looks to be very decent enough, at least for the next quarter coming in for these companies. When it comes to the rural demand or probably the margin expansion, what do you make out of it?
So one is, I think the FMCG as an entire pack is quite expensive for the kind of growth what they deliver. And up till now, last 2-3 years, the growth has largely been driven by pricing, and volume growth has been largely sort of missing for most of the players. And our sense is that if your monsoon last 4 years has been good, but this year, if there is an anticipation that probably, say for example, what we are seeing in case of wheat or some of the other commodities like sugar, if the monsoon is not really sort of good and we have got La Nina kind of effect, so probably the rural recovery might still sort of take some more time. So from that perspective, I think FMCG as a counter is something we are not really comfortable recommending. So while we may not see much of a price damage, but we don't expect this segment to sort of outperform the market. Although it has done in the recent past, because that is a traditional behavior of the market. So whenever the markets are volatile, the stable sectors like FMCG relatively do well. But to sort of keep outperforming from current levels, I think is a lot more far-fetched. So we really do not like this space from an outperformance perspective. Yes, if somebody is looking at stability in the portfolio, then FMCG obviously suits the bill.
Suits the bill when it comes to the stability, if that's what the investors are looking at. And when you talk about that, are there any 2-3 names which you'd like to suggest? Overall, you aren't that comfortable with this space right now. I do understand that. But what do you make out of it? At this point of time, which stocks are you really bullish?
So one is obviously ITC. ITC, I think, has been doing well, especially the 10 rupee price segment. So that is where they've been sort of delivering good double-digit kind of a volume growth. Taxation has been sort of stable. And I think the rest of the other businesses are also sort of looking positive for ITC, especially when you look at the hospitality as a space, which is structurally looking good to us for the next 2-3 years, if not more. So from that perspective, ITC, and then Tata Consumer is another company which we sort of continue to like. One is, I think, this is one company which is quite focused on the food as a portfolio. We're seeing good amount of premiumization, especially on the salt business. And I think whatever volatility related to tea prices, that has already sort of panned out. So we'll see a more of a normalized growth panning out for this company. And so I think these are the two names I would prefer in the FMCG as overall pack.
All right, Pankaj, let's also chat about cement stocks, right? There is this entire narrative right now which is building in. Yesterday, there was a dealer check which spoke incremental reports suggesting price hikes. Now there seems to be a little competition as Adani is slowing down the expansion plan. There was a buzz around the GST rate cut. What do you make out of it? Do you think these indicators point towards the changing scenario for the industry overall?
So I think one is, I think we need to look at from the budget perspective. Budget is quite sort of capex intensive. So that is, I think, is going to obviously help a lot of these traditional sectors, be it steel, be it cement. Now, cement, the kind of EBITDA per ton improvement which we were sort of anticipating hasn't sort of really panned out. Probably in Q4 is where we would expect about 200 to 300 rupees per ton kind of an improvement, largely from the softening of the commodity prices. So that is what we are expecting. Now, on top of it, if we get a price hike of say 10 to 15 rupees per bag, obviously then that would mean that largely a good expansion in the overall EBITDA per ton, so which is what we are expecting. Q3 has been sort of slightly weaker from an execution perspective. Q4 ideally should look a lot more better from an execution perspective. So we should see quarter-on-quarter volume growth plus margin expansion. And I think so from that perspective, cement is one space where we are liking most of the players. I mean, including Adani Group stocks, so be it Ultratech, be it ACC Ambuja, or even the smaller names like say JK Cement. So all of them are sort of looking attractive to us. given the fact that you will see decent volume growth plus margin expansion panning out. And I think obviously the bigger worry in terms of supply being growing at 7-8% compared to that, the traditional growth has been on a lower side. So I think that also sort of addresses one of the key risks that the entire sector may not really compete on the prices, which has been the past. So from that perspective, obviously, yes, one of the key concerns also gets addressed.
All right, Pankaj, also your word coming in overall, what do you make out of, we've of course spoken about FMCG per se, we've spoken about cement also, but within cement, there is this name Orient Cement, right? Where there was a development today which suggested that they have terminated an MOU with, Adani for that matter, the lack of clearance coming in from Adani's led to the termination of contract. Do you also hold a bullish view on this regional player as well?
So yes, this stock has been in some of our portfolios. It hasn't sort of really done well because it's seen a decent amount of correction from 160, 70 odd levels to about 117 kind of a levels. But overall, our sense was that if I recollect it right, it has a capacity of 80 million tons, and the overall expansion plans also sort of look aggressive to us. But as of now, so those plans are still sort of under challenge. Probably it might still take some more time to sort of perform, because in the pecking order, you have a lot more other players who have started to sort of relatively do well. We like the space overall, but I think for this stock to sort of perform, it might still take some bit more of a time. Otherwise, from a portfolio perspective, we've been liking this company for quite some time, including Sagar Cement.
All right, Sagar and Orion Cement clearly on the list out there. But Sagar, I'm also going to chat with you if there are any sectors that you think haven't really caught up right now or really haven't seen that kind of traction coming in from the markets, but seem to be a decent bet right now, given the kind of earning potential, given the kind of valuation. Any of those themes that are there on your list?
Yes, absolutely. I think one is obviously the power as a sector. Power is one sector which has been sort of ignored for a quite long period of time. And this isn't sort of done well. But what we like is that the power demand is still sort of inching up 7-8% on a YY basis. And which is why we feel that a company like NTPC, which contributes nearly 24% of the overall generation capacity, ideally should do well. One is, I think, with the demand inching up, the PLF for the plant, which was sub 68 odd percent, ideally should inch up over the next 2-3 years. And that will sort of help them get or fetch higher incentives. It's trading at about 1.4 times. It's making all the right noises in terms of building up a sizable renewable energy portfolio and monetization of that. Then they have done a tie-up with Nuclear Power Corporation of India for nuclear energy. So I think this is one company which hasn't sort of done much of a price performance from a risk reward looks attractive. I think oil and gas is another sector which has been sort of hasn't really done well. So we like ONGC for that matter. It's trading at 4 times PE multiple. Last few years or for a good number of years, we haven't seen volume growth. But our sense is that from next year onwards, we might see a volume growth of 5 to 6%, and which can sort of inch up if they are able to tie up with some of the foreign players for better expertise, especially on the deep exploration side. And overall, our sense is that this stock also is offering a good risk reward or looking good from a risk reward perspective. And we like this space, and I think even the city gas distribution companies also look attractive to us. So both IGL and MGL. I think the only challenge is that IGL sort of trades as expensive, but in IGL typically you'll see 10% kind of a CAGR volume growth, and in MGL you see 5% kind of a CAGR kind of a growth. And with gas prices sort of normalizing, our sense is that the volumes also would normalize for some of these companies along with margins. So I think that is another space which I think looks attractive from a normalization perspective.
All right, Pankaj, we'll leave it at that. Thank you so much for taking out the time and speaking to us this morning.
Thank you so much. Pleasure interacting.
All right, with this, it's a wrap and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below, and do follow us on the link at the bottom of your screen. For the rest of the updates, stay tuned to moneycontrol.com and the Money Control app.